I did think the bank would keep rates on hold today, but what they've delivered is, as you say, an extremely hawkish rate cut. There's reference there to being uncertain about the prospects for more easing after this cut, and the strength in the labour market. The labour market is still beyond where the RBA has previously communicated its capacity lies. What's really interesting to me in this forecast is that they have reassessed the amount of spare capacity that there is in the labour market. They now think that an unemployment rate of about 4.25% is sustainable in the medium run. So, it's something we flagged ahead of time that, we thought it was a coin flip decision, but if they lower their estimate of where the unemployment rate is going to settle, that certainly increased the chances of a cut today.
So what would you say then your expectations for the rest of the year are, given what they've been talking about with erring on the side of caution, remaining uncertain on the outlook, or what that could mean for further cuts down the road? Because I was listening to a few of the bank's economists this morning, folks over at ANZ. I think they're penciling in perhaps another one in August, but then probably that's it, particularly if you've got a lot of the talk in the market of the Fed being basically on hold indefinitely for now.
Yeah, I think, much like the Fed, the RBA is not all that far from neutral policy rate settings. We saw that they didn't go nearly as far into restrictive territory as their peer central banks. And, as with the other central banks, as you get closer to neutral, you tread a little bit more lightly. I think that, a call for, 2 more rate cuts this year, I think is fair from here. We do have inflation in a bit of a sweet spot at the moment. The thing that's going to be really the driver or the tipping point on those decisions is what we get out of the labour market. And we've got really crucial data in the next 2 days. The RBA will really not want to see the unemployment rate tick down in Thursday's data, because that makes it a little hard to reconcile with a cut today. So it's all eyes on, where the easing in the labour market is at. As their notes that came along with the meeting remarked upon, it's still in a tight position and showing very few signs of easing. So, if we're going to get a couple more cuts this year, we're going to need to see some progress there.